Okay, that should be working. Let me know if it isn't. Hope everyone had a nice weekend. Let's talk about some green candles. AV good, thank you. Okay. First things first, Technical Roundup is brought to you by Blockfolio, mobile trading app. I use it. The Duck uses it. Probably the best way to onboard someone into crypto. Automated KYC took me like 3 minutes with no special privileges. Depending on your jurisdiction, they've got stocks and other financial instruments as well. It's a good app. Don't really need to shill it because it speaks for itself. Go check it out and get your family involved in the casino, because that's the only way these prices are going to go up. So thank you to Blockfolio. Get the mobile trading app. Lots of cool stuff there, and will satisfy all your spot trading needs and cravings. So let's start with Bitcoin. So just to address, so what I want to do is first of all address the premise of the title about what are the non-trivial signs of strength, and then once we've done that, because it's quite a simple case, we can mark up a chart from scratch, and then I can talk about my specific trading plan for this week. And then when the chart is marked up, we can also discuss the short-term trade that I took during the course of the week as well as a missed trade that came a bit before that, and current positioning, etc., etc. So where does the title come from? As you'll recall, the market has been trading within this consolidation here. I don't know where these levels come from. Let's try again with a clean chart. There we go. Okay, we'll get rid of this for now. Weekly, fine. So we've been trading within this consolidation. Upper boundary, 38. Lower boundary, 32. And the best way to interpret that is just like any other range, right? Upper boundary, 38. Lower boundary, 32. So then the ordinary question is, if price is within a range, how do we get bullish in those conditions? Or, what are the triggers or conditions for bullishness? The two main ones are a break through the range high, which gets accepted, or a move into support, which just offers a standard bounce, or an attempted breakdown, which is not accepted. So your option one, break and acceptance through balance to the upside. Option two, support holding either just directly or via an attempted breakdown and subsequent deviation. Okay, so the basic premise of the title is that we were trading for some weeks within this consolidation, and on a weekly closing basis, it looks like we've got number one. At least in terms of the weekly close, we had a very strong looking candle, which at the same time held support and also resulted in a close above structure, something that price had struggled with in the two preceding weeks. So as we talked about, we had this double inside week setup, move down, all these 2 weeks worth of stops at the lows get wiped into support, really strong buyback closing through the top of the range, so looking a bit like this. And plain and simple, that's the strongest bullish case at the moment, and it comes from the weekly time frame. Does that make sense so far? Okay, so let's stick with the weekly time frame for now. First things first, in terms of the objectives for bullish continuation, quite simply, the nearest weekly structure is the pre-breakdown floor, which conservatively is the 45 level, and if we get a real squeeze up, it could take us all the way to the 49.50 round figure. I mean, if you're being strict, first trouble area 45, but in terms of weekly structure, don't be surprised to see a wick into 50. This is just your... I mean, there are just good levels in this area either way, but 45 plus would be the objective for such a move if it sees the type of continuation you would want to see from a range breakout and acceptance, right? Of course, we have to entertain the opposite idea as well, that if we got a close above structure and then next week closes back below structure, then the market looks like shit, because you will have had a failed breakout at resistance, which closed back into the range, and I would position very aggressively to the downside in such a case, and it would just look like a really, really bad chart. A fake out through a weekly level, kind of news-based, it would just look quite unfortunate. That's not my expectation for the time being. That's not my bias heading into next week. But, you know, given we only meet once a week, on a closing basis, the worst thing that could happen is price not even making it to these prior levels and simply falling flat on this rally and losing that same range reclaim on which the bullish idea is based. Just to have that in the back of our minds, right? But currently, in terms of the evidence we have available from a directional bias point of view, from a weekly closing basis, it looks like 38 and nearby structures, given it's weekly, we have to give it a bit of space to wick, so we can expect kind of daily levels to fall in nearby, as we'll discuss. You know, 36 to 38 support, and if the market wants to nuke into those levels during the course of this week, I am allowed to buy them in terms of my trading system, right? And the implicit logic in buying a dip into this level or a bit below it was that any price action below the range high is going to be the weekly wick, or where we can expect support, and then expecting obviously continuation into those other levels. So I mean, the simplest way to boil it down, 38 was resistance. We have evidence to suggest that it's no longer resistance and may act as support. So if the market nukes into this area, into either the weekly level itself or daily levels slightly under it, which make for a good wick candidate, it's a decent punt for the high time frame continuation idea. And we'll discuss those daily levels in a second, but does that make sense so far as well? Is there global consensus on when weekly time frame starts and finishes? Yes, there is. It's the end of the week UTC time. Okay, so that's pretty much the weekly idea. Now, what we can do now is delete all of this and work up a chart from scratch and kind of see what's up. So if we go to the monthly, we have the monthly open and the rally from this big nuke. So we can simply title this as a monthly level here. Lowest close on the monthly time frame so far. Okay. Then we go to the weekly. 3 levels are interesting. Let's do this actually. And I recommend to do this after every week or a big high time frame move or just something to readjust from time to time to make sure you're not marrying old levels or being complacent. So we've got weekly range high here. Highest close just discussed. Weekly range low at the bottom. And then we have a midpoint, which is just a middle point between the range high and the range low at 35,261. Let's just do that. One weekly mid. Okay. And then we know the levels above us. Weekly FTA, first trouble area, the first level of resistance if the market has steam, and then we just know this is a weekly level as well. I don't think we need more than that. If we drop to the daily time frame and kind of see what we're dealing with, the only other structure I would add is the current range high on the daily time frame, which is the highest close all the way back at the 40k level, resistance here, and resistance on the bearish retest. And I really think that is more than sufficient. I don't want to add levels if they overlap too much. I'll just defer and trade the higher time frame stuff. Isn't volume also important for determining which levels are important? Not for me personally, although that's totally fine. Okay, so now that we have this image, you can kind of see, I think that's what my personal chart looks like as well. If I go to marked levels, it should look remarkably similar unless something terribly wrong has taken place, but it hasn't. Okay, weekly range high, monthly, weekly mid, daily, weekly first trouble area. Okay, so did this process make sense to you so far? Where these levels come from? Nothing too complicated. The logic is just highest close, lowest close from high time frames. That's all I use. Nothing terribly complicated. Okay, cool. Peter says he does this every week. Good idea. Right, so what do we have on the daily time frame? If we remove our levels, I made a tweet, I think when the market was here-ish, that as you'll recall from our many, hopefully recall from our many discussions on high time frame market structure, one strong sign of reversal is when you get a lower low into a higher high, right? So we can kind of reverse engineer that and ask, why is that bullish? Well, normally if you have bearish market structure, you've got lower low, lower high, lower low, and so on, ad infinitum, whatever, as long as there is a weak trend. So if you get a lower low, which then resolves as a higher high, that's your break in market structure. It's a break from this pattern and a shift in behavior, right? Now, we're quite close to that, but you can see in a moment why the market's in a bit of a tricky position, right? So you've got high, low, lower high, lower low, lower high, lower low. And so the question here is, has this currently satisfied the criterion to be a higher high and suggest reversal? So it's close, but 2 points must be made. First of all, in order to, for me, trigger a bullish market structure reversal setup, it has to close above the lower high which precedes it. Okay? In this case, that would be the highest close of this swing point. And as you can see, it's kind of there. It's battling with that level. We'll know by the end of the day whether that trigger is valid. But either way, ideally you want a strong close through that level to suggest that all the sellers of the anticipated lower low, lower high, that they've been blown out, right? You want to see real evidence of imbalance through this level, and then on the pullback, that's where you position. So the fact that it's wicking or slowing down means that we can't make that determination very clearly. That's point number one. Point number two is that, unsurprisingly, we have confluence at this market structure level, all the way back from this 40k previous range high, which is currently acting as resistance. So if you rushed into this market structure setup to say that, well, look, we had a lower low, and now, oh, this looks like a higher high, right? If you rushed into that setup without waiting for the close or anything like that, there's a good chance that you were buying resistance on the daily time frame, and that's just generally not a good idea, right? So we're forced to confront the fact that while the weekly time frame looks good, on the daily time frame, 40k is a bad place to position for the bullish weekly idea. What you essentially end up doing is you essentially buy daily resistance, hoping that the weekly time frame carries you through. And that's generally not how I trade. As discussed, what I want to be doing is buying a more noticeable dip into what's expected to be support, and then for the test of daily resistance to break with the existing tailwind of the weekly time frame being on my side. So it comes back to the point that you can be bullish something, at the same time acknowledge that I am bullish higher time frame, but this is a bad place to bring that idea into action, or to simply execute it. Does that make sense so far as to why this is a tricky spot on the daily time frame, despite the weekly being positive on a closing basis? And yeah, like the video if this has been remotely helpful so far. Or not. I mean, it's your choice. I'm not going to make you do anything. Okay, and we will talk about the trades I took and didn't take, Mr. Gonzalez. So bear in mind, bear with me. Someone asked if 40k is a psychological level. I mean, yes, in terms of round number, but we have to remember it's really good technical structure as well, right? Comes back all the way to this prior range high. It was the top on the first real bounce we had after the nuke, and that's where the market's finding resistance as well. So I don't want to be long into the level, right? So, purely conservatively, I can totally see a world where you argue that, look, this is still technically range-bound. Yes, the weekly closed above it, but there's daily overhang at 40. I'm going to look for a move through 40 and look to capture whatever's left of the leg into 45. Like, that to me is a totally reasonable trade idea. You obviously leave more on the table with a later entry, but you have the benefit of clearer invalidation and quote-unquote confirmation. So if we go back to like really first principles, I have no issue with someone saying, daily close above the 40k range. At that point, we'll have weekly plus daily time frame bullish alignment. So weekly close above 38, daily close above 40. No real resistance left. You have invalidation in the form of the breakout candle and a clear target in terms of weekly and daily structure in the mid-40s. I think that's a totally reasonable view to take for this market right now. Okay. As for what I'm going to be looking for, so we broadly agree either way, no matter whether you're being particularly conservative or not, that buying into 40, buying the level itself, is probably not the best way to go about it. But we also have to respect the fact that the weekly is telling us that there's a really good chance, or there's good evidence to suggest a push into 45. So then how do we position for that? What am I looking at least? Well, this comes back to the point made at the very beginning, whereby the upper boundary is now expected to act as support, the 38 level, but it doesn't have to be perfect, right? When you have higher time frame levels, you need to be permissive and expect some sort of wick price action, right? So just like the lower boundary here wasn't perfect, you got a bit of a wick and a test of some lower time frame levels. If the market pulls back to 38, we have to have that same flexibility that it doesn't have to perfectly reverse from this level. It could poke a bit deeper with the idea still remaining valid, right? So in this case, what do I want to see? A couple of things. Yeah. Oh, it's a bit ugly. Whatever. So just by eyeballing this chart, right, you can see that we've got a bit of a shelf of support formed at 37 to 38k. What resides at this level? Well, first of all, it's this weekly range high. And we have decent evidence to believe that it's going to act as support based on the weekly close. And we have this monthly plus daily level, just a bunch of confluence going on at 37.8 as well. So I think a reasonable scenario that I'm open-minded towards later this week is a rejection from resistance into this area of potential broken resistance turn support, and then a higher low formed there, and a subsequent break of that same resistance and taking us into our weekly objectives. At the same time, looking at this shelf at 37, 38, even if we remove all of our levels, we have confluence there because it would also align with the market structure idea, right? If this is the lower high, as we discussed, when you've got high, low, lower high, lower low, higher high, right? The bullish reversal setup is taken at the last lower high here. Applying this market structure schematic to the price action ahead of us, the extreme or the bottom boundary of that pullback level would be the open of this swing high, which falls into 37k or thereabouts as well. So I'm not immediately concerned with a 40k rejection. I just think that's aggressive positioning, buying resistance, and it's really early in the week. That's not a huge red flag. But if any support has to hold, And if I'm looking for evidence that we are going to be bullish this week and follow through the weekly close, for me, the place where it makes sense to bet on that outcome is 37 to 38, which is this confluence of weekly and monthly structure. So something like that. First trouble area is the range high, but honestly, if we put a higher low so close to 40k on a bounce, I would expect this level to roll over and take us with the weekly time frame tailwind into 45 plus. So just to recap, what have we got? If you want to be conservative, your argument is pretty straightforward. We did close above 38k, but we have daily resistance at 40k. If I get a daily close above 40k, then we have weekly and daily time frame alignment, so resistance broken on both time frames, and the probability of a move to 45 plus is pretty high. Of course, the downside of that is that there's a non-trivial chance that if you're waiting for the 40k break, it could well look something like this. It could be just a big move which breaks this range completely, and by the time the candle closes or gives you something actionable, the idea itself has mostly played out and you've got very little left to capture until the area that you have to de-risk. Now that doesn't mean the trade is a bad idea. It just means you have to be aware of the risk-reward trade-off you're making by waiting for the daily to align with the weekly. I think that's a totally fine idea. If I don't like how 37 to 38 looks, I may have to join the same trade, right? The alternative to that, if the weekly breakout is enough and you're not comfortable or simply don't want to wait for the daily to come into alignment for those risk-reward reasons mentioned just a moment ago, this 37, 38 level just makes sense to me as high time frame support and a spot to put in a higher low before reapplying pressure to the range high. So the trade would look something like this, right? Ideally some sort of wick, or I like doing business at the extreme with 38 holding on a daily basis or thereabouts, and then first trouble area, range high, and then expecting expansion into weekly level. Of course, that also means that if this area fails, right, if we get a rejection from the range high and market comes in and you get quite a strong close through support, the bullish idea for me would be invalidated, at least my version of it, and price would, by definition, end up back at the midpoint of the weekly range. And as you know, I don't really like to diddle in the middle, especially in the context of the best candidate for continuation being lost as support. So just to recap, again, the weekly time frame looks fine, looks good, it closed above resistance. What are some ways to take action? The first one is quite simply 40k plus on the daily time frame, with your invalidation probably being the candle which breaks the structure in the first place. This setup is good because you have weekly and daily alignment. The setup is bad because there's a good chance that by the time you get an entry trigger, most of the move has played out. Okay? The alternative, if you, like me, look at the weekly time frame and say, okay, looks like we have a close above resistance, I can buy dips this week. The next logical question is, where can I buy those dips, or what are good candidates as support if we're bullish on this week? And for me, those candidates align at 37 to 38. So I'd be willing to make that bet if price action is accommodating or appropriate, with a soft target at 40k, but being cognizant that this is a weekly time frame idea, I'm generally looking to take it towards weekly structure, which would be at 45. As for invalidation, as mentioned, any weakness through or price failing to find support at this 37, 38 level would suck. It would mean the best candidate for a higher low has failed, and price is back at the midpoint, an area where I don't feel compelled to do business. Is that somewhat intelligible? Does that make sense? Demo Crypto says no. Can you tell me what doesn't make sense? And I'll try to paraphrase or answer your question. Oh, you're joking. I can't stop laughing. What about a wick to 16k? I'm not sure what that would look like. Great stream, Don. Thank you. Okay. For those, I also briefly want to discuss my own positioning. Frustratingly, I was looking to get long on this nuke into the range low. As we've discussed, if you're going to bet anywhere on crypto, it's in the low 30s, because we know that below that it's screwed. And I wasn't successful in either of my setups triggering. So I had a couple of things going on. If you remember, I was looking to do business at support. The two levels I had in mind are the weekly close at 32.3, and then I have the extreme of that structure on the daily time frame at 30. So as the market was trading below weekly structure, it came very close to my daily level here, and my expectation was we take out this low into my daily level of support, and that's where I had limit orders to buy. Now, also being completely frank, there's a really good chance that those limit orders, or if I got filled there, that would have been closed at this first trouble area. Support, breakdown, fill, resistance. You can see that level actually came in super handy later, and I also did trade some portion of this move. But in terms of spot allocation, I definitely was looking to buy this extreme, but didn't get a fill. Okay, so the market moved away from that, and then my thought was, okay, we moved away from my greedy level, but I can still do business at weekly structure. And I was looking or consulting intraday timeframes for that, specifically on the hourly. So what do we have? Market is at weekly support. It nukes. I'm thinking, okay, I want to buy this up. I don't get any fills. And then, of course, the market snaps back, makes a higher high, right? Or at least breaks market structure. And then my thought is, okay, if this is still like weekly price action, there's a good chance that this is now the weekly wick, and the level itself gets retested one more time before we get the high time frame move. So at that point, in recognition that A, my limit orders have missed, and B, there's pretty strong buyback which took price back above the weekly level itself, quite reasonably, my decision was to look to buy a retest of weekly structure. As you can see on this pullback, I had orders at the level itself. They missed, so I didn't get a fill. It's simple as that. So in terms of higher time frame spot allocation, my options were to buy the extreme or buy the retest of the weekly level. It didn't get to the extreme, and I didn't get a retest of the weekly level. Yes, I'm totally aware that it came close and retested this low here, but I'm generally pretty strict about trading at the structure that I care about, and I wasn't just going to abandon those rules or whatever. So close call, shit happens. A lot of talk to say you didn't trade nothing. I mean, look, if you're not interested in missed trades as a part of trading, then I won't talk about them. But I think it's helpful to see that you can make a plan and have several plans, and sometimes you just don't get filled. What's the value in me saying, hey guys, didn't trade nothing, and then closing the chart versus actually outlining my plans, the evolving nature of the plan as price moves from level to level? I don't see the value in your comment. And it seems most people disagree with you. Anyway, I did finally take a short-term trade, so not all is lost. Specifically, if you remember this daily level that we spoke about, the one which I was going to use to take profit on those bottom long positions if they got filled, I had this as an intraday level of resistance. So as the market nuked into this, I was a limit buyer of, this is again really short-term strategy, right? I was a limit buyer of this level here, and I closed it at the first trouble area, which for me was actually the bottom of this cluster. Doesn't look like much, but I'm literally looking at these things on like the 1 minute to the 5 minute time frame, And on that time frame was actually a very satisfying trade to take. Hold on, that's not right. Yeah, here we go. So this is, I think, one of the faster trades that I had. I didn't get filled here on the deep wicks. Bought the retest of that structure. I got partially filled at the level itself and then closed the rest in the consolidation when it was pulling back. So purely in terms of just like really short-term trade, short-term strategy, whatever, risk-reward stuff, doing business at the structure itself, mental stop, because there wasn't even time to put a stop loss on this here, and then average wasn't like at the level itself because I got partially filled and closed the rest. Let's take the average. I mean, this for like 10-15 minutes is super, super satisfying. And it was actually, hilariously enough, the first trade that I took since catching the crash, the 60, whatever, 55, 60% day down. So yes, bad luck on the limit orders not getting filled for spot, but at least we got a very nice kind of instant gratification scalp on the table as well. So that's kind of an update in terms of my business. As you can infer from the spot stuff, still in USD in terms of my collateral, and on the trading side of things, managed to catch quite an easy short-term trade, and that's really it for the time being. Sorry about that noise. Let me see if I can just bring something up. Yeah. Okay, so you can see the entry at the level itself, 34,752, right? I like to do business at the levels themselves, 34,752, and then getting out some fills at the other level, 35,526. 35,526, very partial fill, really not much there. And as the market started pulling back, my evolving I don't want to hold a rip like this, so I just kind of got out the rest with market orders in this consolidation here. That's it. Just as simple as that. Do you always close the full size of the trade on the first trouble area? Yeah, as a rule, unless the... Yes. Yes, I'll just go with yes. Cred, do you scalp usually? I mean, on the 1 minute time frame or things like that? I mean, sometimes, right? Because you have to bear in mind, look, where did these levels come from? How did these end up on the chart? They're all daily time frame structures, right? So if I see low time frame price action that I like at high time frame structure, I'm really not averse to punting. And in this case, it was like a bit of a screamer, because I was looking at low time frames. Boring range, boring range, boring range, starts to break down a little, and then a single candle just dumps straight into support. Like, yeah, there's probably some sort of bounce to be had. This I wasn't expecting, just a straight rip, higher high, whatever, but, you know, it's a welcome development. In a scalp like this, do you go very small size? No, not necessarily. These are still high time frame levels. I'm just trading a smaller rotation within those high time frame levels. But yeah, I mean, generally in terms of percentage of portfolio, sure. What was the criteria to decide this was a scalp and not a longer trade? I spoke to Don about this, actually. In this case, this was like a totally valid setup for a swing trade as well. But for me, I was just being slightly cautious because of all the missed orders I had at the lows. And I really wanted to get a trade under my belt, given the last time I traded was here on the crash. So I was comfortable trading that as part of my short-term strategy. But like looking at the chart, right? Support, 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 breakdown, reclaim, retest. There's no reason not... Like, there's nothing which says this has to be a scalp and not a swing trade. I just treated it as a scalp. And often what I'll do is I'll treat the first test and bounce as a scalp. And then if it comes back and builds some structure or just even retests the level, I don't mind building a swing at the same level, right? And you can actually see the market came in and retested it here and had a big move. I didn't trade this. Okay. So is that helpful so far? We discussed the Bitcoin high time frame, what I'm looking for this week in terms of lower time frame structure, how I've tried to play around my spot, and a short-term trade as well. Have we missed anything? Any questions? I don't have recommended trading books. And yeah, like the video if you like the video, I suppose. Why don't you use volume? I don't know. I just don't. It's not 240p. It might just be for you. Any oscillators in play? Not really, no. I don't reference moving averages or technical patterns, no. Okay, so that's kind of it for the time being. I think the plan we discussed is fairly self-explanatory, and we'll see what comes of this setup. How is Donald position? I mean, look, it's very embarrassing that Twitter has been such that Don feels it's a waste of his time being on there. And I don't blame him one bit. Like, I get very frustrated reading the comments to his tweets because all he's been doing in the low to mid 30s is posting buy setups. Like, the original nuke, here, like, I think there have been 3 or 4 very clear occasions where he's saying, look, I'm a buyer. If there's anywhere to buy, it's here. I'm looking for buyers, and giving actual setups as well. And then you look at his comments section, it's pure delirium and hallucinations of people saying that he's bearish or asking him how his shorts are going. It's just incredibly childish and asinine. Like, he's a really, really, really good trader. He is not a very, very, very good price cheerleader. And somehow in the past year or so, people have lost sight of what one means versus the other. So just because he wasn't cheerleading price on this type of rally doesn't somehow mean he was short or bearish. I mean, for fuck's sake, with his current status as a citizen of Germany and how they're regulating tax treatment of derivatives, he's literally not been able to short in the past year or so. And all he's posted was basically the top, when we were at the top, and then a bunch of buys in the mid to low 30s. Like, he's been absolutely smashing it. And then every time I open his comments, it's some idiots hallucinating that he's somehow this shady bear character who's missed out on all of this and is now selling this. I don't know how to describe it. It's indescribable. And he's far too humble and too good of a person to bring up the trading logs and whatever else and smack these people down. And so he just gets off Twitter, and it's such a huge waste. And you know, whatever. This is what happens. I just find it incredibly frustrating, especially knowing him personally. I'm there reading the same feed as everyone else. He's jamming longs at support. Gave a very clear sell setup stuff, whatever, analysis. Sorry, he's jamming longs in the low to mid 30s on several occasions. Gave you the top. And then all the comments have him as some whatever counter indicator, perma-bear, whatever. It's absolute fiction. And I mean, it gets quite absurd. I will bring one thing up. So in the replies to one of his tweets, there was a like when he said he was leaving Twitter, which I don't blame him for. Like, as I said, I find his Twitter feed infuriating. There was a gentleman who made a tweet in response to him leading. Not a gentleman, I mean, he's a prick. Who made a tweet response saying, oh, so this is what you do when you get wrecked, right? And then I made a response saying, can you show me the shorts he posted? All I see are longs from the low to mid 30,000s. Genuinely curious. And of course what happened was that guy deleted his original tweet and then apologized via DMs and also on Twitter saying he was wrong. I mean, for fuck's sake, right? People just literally making stuff up in order to have this bogeyman to trade against. Like, oh, everyone is bearish and Donald is a perma-bear, so if I'm long, he is my rightful enemy. It's absurd. It's so wasteful. And I feel pretty strongly about it because, you know, you just push away the good people who aren't scammers, who aren't price cheerleaders, not trying to jam shitcoins or pre-sales down your throat. And when they share their analysis, the best they get is a bunch of dickheads giving them that sort of treatment based on things which are blatantly, demonstrably untrue. It's pretty sad. Anyway, I'm sure that's enough on that topic. So yeah, that's what I've got for Bitcoin. Weekly, good, not buying resistance, pullback level, 37, 38. If that fails, fuck it, wait for something clearer. If you want to be super conservative, daily close through 40, easier route to 45, but that's probably not what I'm going to be gunning for. Okay, I think that's pretty clear. If it isn't, let me know. So, other stuff. Ethereum. This is like one of those weird ones, right? So on the dump, Ethereum's market structure held up better than Bitcoin, but Bitcoin had this pattern where it was more bearish to the downside, but then it sprung and made this, you know, higher high type of structure. So, you know, in terms of which chart has better market structure, like if you're looking at lows, then maybe Ethereum, because it just held up better and didn't have to come back and retest all of these levels, unlike Bitcoin. But if you're looking at highs, Bitcoin is more impulsive at the moment. So, you know, that's a bit of a tricky one. In terms of the chart itself, I swear I marked this up somewhere. Was it here? Wrong template. Hold on. Here we go. I don't use any indicators to find confluence. Yes, I only primarily trade using price action, and I'll look at futures data as well to see what's up. It appears that my levels have vanished, which is cool. I didn't need them anyway, right? That's fine. So we can do a similar exercise. Oh, here we are. Why don't I have any Bitcoin levels here? Whatever. So if we look at a daily view of the ETH chart, okay, this looks more range bound than Bitcoin from a high time frame point of view, right? Because what's overhead is kind of the monthly open, or where the monthly candle bodies are at 27,2800. Yes, it's been choppy, not necessarily actionable from a trading point of view, but it's quite clear that this is the range high. That's where the overhang is 27,2800, and in terms of where it comes from the monthly, literally the monthly highest close or last week's monthly open, whatever, like the monthly candlestick bodies, right? So that's what's above us in terms of resistance. What's below us in terms of support? I mean, local market structure is working pretty well, right? You've got low, higher low, and then a higher low formed at that level. So that's your local support, 2300. But if we're talking about the higher time frame range, as discussed, we have 2800 above us, and then more or less 2K below us. And that's kind of it for the time being, right? So if we're going to make strong cases for continuation or a return to some sort of trending environment, it's either going to be through 2700 in one form or another, bearing in mind this is a monthly level, so this could be choppy, take some time, whatever, but like a daily impulse at least through where all these equal/lower highs are formed, that would take price at least to retest the origin of the breakdown at 3200. So in theory, the trade would be from a to B, right? Something like that. Never this easy in practice, but purely structurally, that's sort of the path to take. Alternatively, the bullish trade, or sorry, the kind of buy the dip trade would understandably be a more pronounced pullback into actual structure or support, which for me is around 2k on average, right? A bit below, a bit above, into this area, and then you play a bounce as aggressively or as conservatively as the setup presents itself, right? Obviously, the most conservative setup would be quite simply this area of market structure. Price comes into support, you get a bounce, and you sell it into broken support 10 resistance. That's a setup I can totally see myself taking. Or if you want to have a bit of fuel or juice for something a bit more substantive, what we'd want to see is an effort to break below the range, which is unsuccessful, gets reclaimed, and then you've got a risk-defined setup where you can jam more size, and then you target the range high, which has already been tested 3 times, so a good chance you end up at the higher levels. But just eyeballing this, right? Is price at structure? Like, is it at resistance? Well, no, it isn't. And really looking at the lower time frame price action at this higher time frame level, I wouldn't want to be doing too much business there anyway, unless it's super clear or new levels form one way or another. Is it at support? Well, no, it's not there either, and hasn't been, because lower time frames / local structure have been doing their jobs properly, right? So where are we? We're kind of in the mid-range, not at high time frame structure overhead, not at low time frame structure below us, and less clear, both in terms of support resistance, but also daily market structure, than Bitcoin dollar. So for the time being, this needs to do stuff in order to be more appealing. Does that make sense to anyone? I'm fresh, mate. His first question was, Creed, are you rich? Now he's saying, Creed, did you go to college? Mate, I'm not trying to fucking speed date you. Please ask relevant questions. I don't want to answer your phishing scam. Okay, so it makes sense. Hi, SZ, by the way. I saw you lost 1R on a trade. If you need someone to start a GoFundMe to feed you for next week, let me know and I'll leverage my Twitter followers to get you some bread. Yeah, so that's ETH. You guys know that I'm not good at making stuff up when it comes to what I find interesting or not. It's interesting here, probably interesting here. Otherwise, not a whole lot standing out. Market structure's okay. If you want a lower time frame level to keep an eye on, it's probably this 2200 area. Craig, what do you think about Barry Silbert's tweet that 99% of coins are overpriced? Yeah, that's how crypto works. How is Sailor buying affecting your trading ideas? It's not. So I think the ideal scenario with Sailor buying, if he hasn't already, would obviously be he buys resistance this week and just teleports us through it into those interesting higher time frame levels. That would be really cool. Alternatively, I wouldn't mind a dip into the levels that I pointed out as attractive or on my radar, and then Sailor starts ripping it at support the same levels as me. That would be really cool as well, seeing a huge spot bid come in, the TWAP once I'm long. That would also be cool. But really, it doesn't affect much. I do like Donald's take on the whole Sailor buying, which is that it's not really the technicals that are as relevant. What's going to be telling is what happens after he's done buying. So ideally what you want to see is the market maintain strength or stay above key levels, whatever, once Sailor is done TWAPing in, right? What would suck and be an indication of higher time frame bearishness is that if Sailor just gets in, juices the market up, and then the bid just literally disappears and we start to retrace the move up in its majority, entirety, whatever. Because that would suggest that Sailor's whatever huge buy was used as exit liquidity by other participants in the market. That would suck, right? So in terms of how does Saylor affect this, it doesn't really. If he wants to buy, if he wants to buy my support or buy us through resistance, that's cool. But I think the more telling information, purely stealing from Donald here, will be how the market reacts once he's done. Would Saylor market buy, or are bigger deals like that OTC? I mean, there still has to be a spot bid on Bitcoin for him to get filled, right? He can't just magically come into possession of the amount he wants to buy. So that's got to be reflected in the market somehow. I mean, you could argue that it's priced in. I think in this case, he's literally going to be a spot bid buying Bitcoin. So I find that difficult to price in, so to speak. That doesn't mean some of this move isn't front-running his bid. I think that's totally reasonable. The market being cognizant that, hey, a 500 mil or whatever it is, spot buy is coming during the course of whatever, this week, next week. So we're going to buy as well in anticipation of that. So that, I think that behavior is certainly taking place. But I don't think that it's priced in to the extent that you can just buy 500 million and the chart doesn't move. How do you know once Saylor is done buying? I assume he's going to make one of his standard update tweets that MicroStrategy, I think it's MicroStrategy buying it, or maybe they're just holding it, whatever, that one of his companies has completed whatever number of purchases of Bitcoins with his average price as well. He normally sends out those tweet updates when he's bought a certain tranche. So that's what I think that'll be the best confirmation we get. I don't think Hisaka's tweet suggests that Saylor's already bought. I think Hisaka's tweet says that the raise is done and he's now able to buy with the raise being complete. Like he's raised the money to buy the Bitcoin, not that he's bought the Bitcoin itself. Cred, if you were currently long from 34.5, would you have taken profit? From 34.5. Where's 34.5? So this level. If I bought this, I mean, I bought it for a scalp and sold it. But realistically, I mean, the weekly hadn't closed at this stage. Probably, yeah. I mean, if I bought 34.5 as a swing, not as a scalp, your daily first trouble area is the range high at 40k. So most likely, yeah. But those theoretical trades are always tricky. So, don't let me tell you what to do. Saylor's job is to break resistance? Yeah, it better be. Cred, I got in at 50x leverage from 31.7. Would you take profits or hold? Mate, 50x leverage, I'd probably take profit and then withdraw everything and close your Binance account. And take a big break from leverage trading until you kind of figure out what you're doing. Do you ever look at order book / depth charts? No. Altcoins, I'm still not hugely interested. Bitcoin has my attention. And again, to steal from the duck, what you want to see at this point, if we're going to have higher time frame continuation, is strength in, I think Kobe made the same point as well. The most bullish thing for the market is to have Bitcoin dominance go up and strength in Bitcoin. And as we know, you have BTC as the one, it's the highest market cap, lots of money to push it around, etc. And then you have the trickle down into, I mean, nowadays it probably looks like this, ETH, and then into whatever. You've got DeFi, you've got dog shit, right, etc., etc. But a strong Bitcoin is good for crypto generally, including altcoins. And you see risk kind of flow down and rotate into lower market cap, higher beta assets once you have that floor in Bitcoin. So normally you'll see a bid rotate to ETH BTC is bullish, and then you just kind of go further and further out on the risk curve, DeFi, other altcoins, and so on and so forth. So Bitcoin dominance going up and kind of higher time frame continuation, whatever, that may be painful for altcoins in the shorter term, but a strong Bitcoin is generally the environment where you want to be trading altcoins with more confidence, knowing that Bitcoin is a tailwind, not a headwind, is always makes for a good environment, generally. I don't think about Mercury retrograde and moon phases. No, I didn't watch the Lex Friedman Vitalik podcast. Should I? Is it good? Should we expect a pullback from here back to 37k to re-hit the res later? I mean, I don't know whether you should expect it, but that's certainly something that's on my radar. Right? The idea that 40k holds a little bit and we get a pullback into those daily and monthly structures, some sort of throwback before retesting it. I mean, if that happens, then one of my plans will likely trigger. So I don't know whether you should expect it. I mean, it makes sense, but whether it happens, I mean, I'm not in control of that, obviously. I didn't look at Matic. As I said, like altcoins, I'm not quite there yet. I mean, purely chart-wise, structurally, best I could probably do is punt back under $1. But even that's a bit of a steep decline. Another 30-40%. Don't know how likely that is. But this isn't somewhere where I can trade it right now. Perp is just an abbreviation for the perpetual swap on FTX in this case. Yeah, I can look at Solana. This is one we wrote about in Technical Roundup. It was one of the strongest altcoins after the dip, but it remains the case that this pre-breakdown structure is still resistance. So if you want to be bullish Sol, it's got to be above resistance, where there's no resistance left, and you have generally a pretty easy trade towards all-time high and beyond, or, at least in the very short term, the bottom of the range support at the 24s. So this rally took price into resistance. I don't want to buy the underside of resistance. Through it is fine. Back at support for some sort of bounce is fine. Here is not fine. For me. I don't know or trade Renko, so I don't have a take on Renko. No, Andrew, I wrote about the death cross. I just generally don't think it's hugely useful. Like, it's a trend following signal that's pretty slow and we don't even know if it's going to be printed yet. Like, Rect Capital has a good thread about what price needs to do to avoid printing a death cross. But even if it prints a death cross, it's a very slow moving trend following signal, and the market nuked 60%. You don't need a death cross after a 60% nuke to maybe get you to consider that the market is shitty/weak, or was shitty/weak, right? Otherwise, you'll end up with this absurd scenario where the market nukes 60% and you're like, yeah, whatever. And then you see a death cross like 3 weeks later and you're like, oh, wait, guys, are we bearish? Maybe we're going down. It's like, you didn't need to wait for weeks after this to maybe entertain the idea of downside, right? And I generally think daily market structure is a superior guide that's actually actionable. Actually actionable, yeah, as well. I don't care about stock to flow. I don't find it compelling. It doesn't play a part in my trading system. If it gives you conviction to hold, great. But no, I'm not going to go down that rabbit hole. We've spoken to some people on Technical Roundup about stock to flow. Go listen to the episode with Eric Wall, really good one. But I'm not going to be like the crypto YouTubers who just randomly lift models they don't understand and use them as bullish or bearish confluence. Just not interested. I don't really like indicators. Someone asked what indicators can we use to spot the live liquidation zones. I mean, you can either watch the tape, like AGA, for example. You can look at whale calls as well. And you can also just use your head that a lot of these liquidations are going to come, especially the big ones, around big market structure levels. So, for example, I think if we break below all of these built up high lows, there'll probably be liquidations taking place as people have their stops at this logical area of market structure. I'm not hugely fond of those liquidation levels projection tools. I think for the most part, watching the tape and using your brain makes a lot more sense. How would you look for that sailor is bidding? I think unless something has changed, a big noticeable Coinbase spot bid / premium would be fairly compelling evidence. Vinod, if you ask a question, at least afford me the courtesy of 10 seconds to answer it. You don't need to spam it. I promise you I can keep up with the chat. I used to read books. I don't use pivots as confluence, no. Yeah, it's quite well established that I'm the most successful on-chain analyst in the crypto space. But no, jokes aside, I follow some on-chain guys. It's interesting to see how they view the market. Like, I know I troll that kind of stuff, but I'm generally a very open-minded person, and I speak to them and learn more about it. We had Will Clementi, I'm probably butchering his surname. He wrote to us a special guest section in Technical Roundup. It's just like anything else, it's a tool, and idiots will find a way to use a tool badly, smart people will find a way to use the tool well. It's not, terribly complicated. My only issue, the reason I started trolling on-chain was I was just putting up with so much horse shit between 40 and 50k. Specifically, I took issue with the certainty with which claims were being made about adamantium on-chain support. And like, oh, you have to be insane to sell your Bitcoin here. I mean, anyone making such strong claims about a market like this, if they get it badly wrong, they deserve a bit of a poke and prod. That's it. Nothing too serious. Joey says, what would you advise someone just getting into the market, like how to make a living off trading? Here's a really good one. If you're just getting into the market, don't expect to make a living off trading. Focus on learning. Focus on knowing yourself better. Focus on the trading process. The whole trading for a living thing when you've just entered is just the last of your concerns. If you can stop hemorrhaging money, you're better off than most. That should probably be your first priority. My mum keeps telling me that I'm stupid trying to make a living gambling. What can I answer to that? She compares to sports or horse betting. I mean, results is probably the best way to convince someone over a meaningful period of time, like quarterly, 6 months, whatever. Proof is in the pudding, so to speak. Consistent returns in a reasonable risk-adjusted manner. At some point, it just becomes pretty difficult to argue against. Focus on yield farm Ponzi's. Yeah, that's a good answer as well. For beginners, who/what would you say are the best resources? I mean, my stuff is super... No, okay, the sentence isn't my stuff is super. I would probably start, depending on how you want to trade. I don't think my resources are a terrible place to start, but it all depends on how you want to trade. Like, if you think TA is dog shit and you have a different background, there are many ways to make money in crypto, and candlestick gambling is quite low on that list. So it's I don't want to blanket advise, oh, just watch all my videos, that's how you start trading. If you're interested in the technical side of things, or at least have a basic understanding of technicals, start there. But crypto is very rich and diverse in how, in the different ways you can make money. A lot of it isn't even directional, right? So how can I make screen time more productive? Trade. Make notes about your expectations. Make notes about your observations. Set some sort of target for yourself. Like, what am I actually trying to follow or achieve this session? Is it about whether my level selection is good? Am I trying to find alpha when it comes to entry triggers? Maybe something with regard to candle closes, like, does this tighten up my entry? Trade management, whatever. Like, set some sort of objective, something to improve in a screen time session, ideally in the context of a trade, even if it's like 10, 100, whatever dollars on the line. Just staring at a screen won't be good. Having some rough outline as to what you're looking for, why, what you see, what you notice, probably much better than just staring at a screen and calling it screen time, you know? Have you had problems with the bank when you cash out some gains? All the time. My bank constantly thinks I'm being scammed. It gets pretty bad. They'll legit... And look, I've sent them everything. I've sent them like full statements, whatever. They still give me grief. A couple of months ago, I got a call from... Actually, you know what? I'm not even going to tell that story. Yes, the short answer is yes. Banks still give me trouble. Any DeFi coin charting? So Ask, the reason I'm not terribly interested in altcoins at the moment is that Bitcoin is at a unironic do or die type of level. And I think if it decides to do, Bitcoin is going to be the better long. And if it decides to die, altcoins will just die a lot harder. So in terms of where is there opportunity, or where is my time, attention, capital, focus, whatever, best served, I think it's currently Bitcoin. Both in terms of the context, but also just pure technical structure, which is why I'm not leaning on DeFi stuff for the time being. You ever trade with your gut based on experience, or solely levels, etc.? I mean, sometimes I trade levels with my gut, if that makes sense, but I won't enter in the middle of nowhere based on the gut feeling. How do I stop liquidating my accounts? Stop depositing. Cred, how do you define a complacency shoulder? I don't know. Like, I think a complacency shoulder would be a rally into the first available level of resistance, which just gets completely smacked down, and the bid just vanishes at that point. So in that case, it would be kind of in the 45, 48, 49, whatever. The market just creeps up there, and then just literally we go all droopy dick back to where we came from. That would probably be it. Kind of a bearish retest that everyone is... I hate that term, but you know what I mean. A bearish retest that the market is optimistic for is probably a functional definition of a complacency shoulder. But purely technically, it's just a retest of resistance, which works. Okay, we've discussed the stuff that I think is relevant. Was that helpful for Bitcoin, ETH? Do you have an understanding of what I'm looking for, why the title is what it is, and all that? If so, like the video. If not, leave me a comment. Well, not leave a comment. I mean, I'm reading the chat. Let me know, and I'll reply to anything for the next couple of minutes, and then we'll all go and enjoy our Mondays. And as always, I'm grateful for you hanging out here. I didn't do a news part this time around. I didn't see anything hugely interesting, and it's mostly MicroStrategy, and that's to some extent going to be reflected in price. So that's been my focus. Okay, no questions, it seems, which is fine as well. Thanks to Blockfolio for supporting Technical Roundup. I mean, just get the mobile app. Real talk, it's good. And we can all get our family members into the Ponzi. For those someone asked earlier, I haven't rebought any altcoins for my family members yet. And my strategy there is maybe they'll just forget that they exist and never ask me about them again. So if the market vanishes and goes to zero, it's like it never happened. That would be cool. But if you want to play that dangerous game of Ponzi schemes to family members, Blockfolio for all your crypto onboarding and spot trading needs. Like the video, subscribe to the channel, go tell Donald that you love him. That's all from me, and I will see you in the newsletter tomorrow. That's trletter.com. Free, 1 email per week, no nonsense, no bullshit. That's trletter.com for the newsletter, and then we'll try to get a podcast guest this later in the week as well. So yeah, thanks. Hope that was cool. I enjoyed it, which is a welcome change, and I'll see you next time. Bye bye.